let's start the class then. Okay. I think how many have joined now? We have only 14 today. I think I was expecting a count of 18, but we are only 14 today. Okay. One more has joined, so 15. Okay, let's start, guys, the discussion. So in the last class, we had discussed about discussed about the first chapter. We were discussing about what is accounting. Okay. Hope everyone is clear about the introduction to accounting. Okay. So today's class, we are going to discuss about accounting terms actually. Chapter number 2, accounting terms, will be our subject of discussion. Okay. We will keep it highly interactive. So I will be asking you a few things. So let's keep it interactive. And the more you participate, the more we can learn together actually. Okay. I see only few faces participating always, but I want each one of you to participate. Okay. Okay. So let me just call one by one. Just say hi or good evening, anything. We have Aditya here.
Good evening, sir.
Aradhna.
Good evening, sir.
Ashwin. The
Good
name is
evening, sir.
Ashwin. I think
Good
it's a
evening,
parent
sir.
name. Sanjana. She's not here.
Yes, sir.
I cannot see your face. Danya.
Sir.
Yeah, I
Sir.
can see you now. Danya. Please turn on the camera. Gautam.
Good evening, sir.
All please turn on the camera. I'm seeing you for the first time, Gautam, I believe. Gayatri.
Sir, good evening, sir.
Navya.
Good evening, sir.
Please turn on the camera, guys. It's mandatory that in my class the cameras are on. Pranav.
Good evening, sir.
Radhika. I think it's the name of the parent.
Yes, sir. Good evening.
Yeah. Shambhavi.
Good evening, sir.
Siddharth.
Good evening, sir.
Akshaya. Yainian and Yugeshwaran.
Good evening, sir.
Okay, good. So we have the full count. 16 students have come in. We are short of 2, but okay, let's go ahead with the class. So today's discussion will be on accounting terms, a very important topic, because once you have selected accounts as a subject, these are the terminologies that you are going to live with throughout your life. Okay, so whatever we are discussing today will be the terminologies that you will be discussing day in and day out once you have taken accountancy, or once you progress with accountancy as a career or subject. Fine. So let me open my slide. Okay, I'm going to share my screen. Let me know once you are able to see the screen. Can you see my screen, guys?
Yes, sir.
Okay.
Yes, sir.
Okay. So basic accounting terms, CBSE 11 accountancy, we are discussing chapter 2 of TS Grewal. So whatever I discuss here will be forming part of your TS Grewal. So let's understand this. The first terminology to understand is entity. Okay. What is an entity, anyone? What is an entity?
It means that business and owners are different.
Entity is a unit which performs economic activities.
Fantastic. Very rightly said. Entity, by entity we mean a unit which is performing a financial activity. Okay. See, generally there are two concepts. One is owner and another is business. Okay. So the business only carries out all the economic activity. Okay. So whenever we discuss about accounting, we always do the accounting from the point of view of the business, not from the point of view of businessman. Like I mean to say the transactions are recorded in the business. Okay, so whatever transactions are recorded, whether we make a sale, whether we make a purchase, it is recorded from the point of view of a business. Clear? That is the meaning of entity. Owner is separate. Owner is separate, but whenever we think about accounting, we have to think from the business point of view. This will get more clear when we start discussing the accounting equation or the journal entries. This concept will become more clear. For now, entity means the business actually. Clear? Like Reliance is a business, HCL is a business, Infosys is a business, Tata Communications is a business. So all this, any transactions which happens in Reliance, it is not recorded from Mukesh Ambani point of view. It is recorded in the books of Reliance from Reliance point of view. It is not recorded in Mukesh Ambani's books. It is recorded in Reliance books. Am I clear? Clear, guys? So entity, what do you mean by entity? A business unit which has a separate and distinct existence from its owner. All accounting records are maintained for the entity, not the owner personally. Clear?
Clear, sir.
Okay. Yeah. So just so the first concept that we discussed is entity. Is my screen visible to all, guys? We discussed about entity as a first concept. The second concept that we are going to discuss is business transaction. And we have discussed this in detail when we were talking about in the first chapter. We can record only what? Only what?
Transactions
Money
that are
transaction.
monetary incomes.
That are financial event. We can record only financial transaction. So an employee is hired. That is not a financial transaction. An entity, when it makes a sale of rupees 1 lakh, that is a financial transaction. An entity, if it makes a purchase, that is a financial transaction. This can be recorded. So whenever we talk about business transaction, it has to be a financial event that changes the financial position of a business and can be measured in what? Can be measured in money terms. Can be measured in money terms. So it's very important that it has to be measured in money terms. Clear? Any doubt? Okay. Now, the next concept is account. See, in a business, there are a lot of transactions like sale, purchase, payment of rent, payment of salary. All these transactions first has to be journalized. Journalized means we put this transaction in the form of a debit and credit. Like for example, you may not understand this transaction now, but if I make a purchase, the entry, accounting entry for this is purchase account debit to cash. Don't ask me at this moment why. We will discuss that later. Okay, that is a whole concept of discussion. Purchase account debit to cash. You may not understand this because we have not even started journal entry. And when we start journal entry, we'll be discussing in detail about all the journal entry. So there are two accounts involved. One is purchase account, another is cash account. So we need to post transaction. Every transaction gets posted in two accounts. So this transaction will get posted in two accounts. That is called as account. So account is what? Accounts gives me a summary record of all transactions. In Sarvana stores or Big Bazaar, there will be hundreds or thousands or 10,000 transactions of sales which are happening in a day, right? So in a ledger, there will be 10,000 entries which will be keep forming in the ledger. If I want to know what is the sales on 10th of July, that is today, there will be 10,000 transactions in the sales ledger of purchase Sarvana stores. Okay. So when I accumulate all the transaction, I will get to know the summary. What is the summary which happened? What is the sales which happened in a particular day? Okay. So why accounts are maintained? Accounts are maintained because they summarize the transaction. Sorry to interrupt. Pranav, if you are lying down, please take a position where you are sitting actually. I don't encourage.
Yes, sir.
Okay. If you are in class, you have to be absolutely in the decorum.
Okay, sir.
Okay. Okay. Business transaction. And more importantly, you can take a place where you have a chair or something. That will be the right place to study. Not in the bed or something. Clear? Because that helps improve the concentration. Yeah. So coming back to the discussion, when we talk about account is a place where all the transactions are recorded. Like if there are 10,000 sales transactions, this 10,000 sales transaction will be recorded in sales ledger. Okay. If I want to see what sale has happened during the day, during the month, or during the year, I can refer my sales ledger. It will give me an exact view of how much sales has happened during a day, during the month, or during the year. Clear? So like that, there are purchase transaction, there are fixed assets transactions, lot of ledgers we create actually. There is salary transaction. How much salary I paid during this month? If I go to my salary ledger, I can see that number. Clear? So account captures all the transaction and we can summarize that account to understand what is the amount of sales involved, what is the amount of salary paid, what is the amount of rent paid, how much stationery we have purchased, how much sales we have done, how much purchases we have done. So for everything there will be a separate account. Sales account separate, purchase account separate, Sham account separate, Ram account separate, or whichever account. Sham is a supplier, Ram is a customer. So every account will be separate actually. Clear, guys? Okay. Take an example. If you go to the bank, if your father goes to the bank and asks for what is the balance in my account on 10th of July, the bank will immediately tell that, right? The moment, so that there is a separate account maintained for your father by the bank. If I go to the bank and ask the same thing, they will tell me a different balance because the bank will maintain a separate bank account for Prasad. They will maintain a separate bank account for Pranav. They will maintain a separate bank account for Dhanya. They will maintain a separate bank account for Sanjana. Clear? Okay, that is what is called account. Any doubt? Similarly, business will maintain lot of accounts. They will maintain a sale account, purchase account, salary account, rent account, furniture account, land and building account, stationery account, repairs and maintenance account. In a company, there will be thousands of ledgers actually, because 1,000 different types of transactions they will do. Inside every ledger, there will be 10,000 transactions also. Clear? Okay, this is called account. The next one, capital. This is the most important concept, guys. Capital. What is capital? Anyone? What is capital, guys?
That's the amount.
Investment of the owner in the firm is called capital.
Sorry, come again.
The investment
It is
of the owner in the firm is called capital.
Good. Pranav, yeah, you are raising your hand.
it is an amount invested in an enterprise by the proprietor or by
Okay.
partners. It's called capital.
Okay. Both Sanjana and Pranav are right. What is capital? I told business is separate, owner is separate. The first thing, the first concept that when we were discussing about entity, I told business is separate, owner is separate. Clear? Now, Pranav is an owner. He invests his money in Pranav Enterprises. Okay. Amount invested is 10 lakh rupees. Amount invested by Pranav in Pranav Enterprises, that amount is called capital. Until there is an investment, a business cannot start without an investment, right? And when the owner invests that amount is called as capital. Any doubt? Any doubt? This is called as capital. To start a business, see, when I have to start a business, when I have to start a business, I need to invest capital. Why I need to invest capital? For example, if I have to start a coaching center, I need to invest capital so that I can buy a laptop, I can buy chairs, I can pay the rent of the institute. Okay, I can buy a digital board. Okay, so there are a lot of things that is required to start a business. So the initial amount which is invested by the owner in the business is called as capital. Any doubt? Clear? So the amount invested by the owners. Okay. So why does he invest? He invests to invest in the assets of the company. Okay. So with that amount only we can buy the assets of the company, right? So the owner has a claim on all the assets of the company. Clear, guys? Any doubt? Capital is clear. In fact, this is the first journal entry that we will study when we talk about accounting equation or journal entries. The first journal entry will be Ram started business 1 lakh rupees. Ram started business with capital of 1 lakh rupees. Accounting entry will be cash account debit to Ram's capital account. Why it is debited, why it is credited, I will discuss in very detail when we go to the chapter of journal entry. Clear? Every debit and every credit has a meaning attached to it. And I will be explaining in detail. Actually, you will start loving journal entries when we discuss those chapters. Very interesting because nothing we have to mug up. Everything can be understood. Okay, for now, capital is the amount contributed by the owner in the business. Any doubt? No. Okay. Drawings. What is drawings, guys?
Sir, it's the amount that is
goods withdrawn
Return are
for
goods
personal
taken
use.
by the proprietor or partner for personal use.
Yeah. See, drawing is nothing but I am a businessman, a sole proprietor. Sole proprietor means individually I am running a business. Okay. Like, for example, if learn accountancy with Prasadar is a business, when I go commercial, if it becomes a business, I will be a sole proprietor of this business. So I would have invested amount into my business in the form of capital. Now I have a requirement. I invested 10 lakh rupees. I have a personal emergency. There is a requirement. I need to get the amount back from my business. 50,000 rupees. I am in need. There is an emergency. So when I withdraw that 50,000 rupees from the business, that is called as drawings. That is called as drawings. Clear? So what it will do, my 10 lakh capital after I withdraw 50,000 will become how much? My 10 lakh capital after I withdraw 50,000 will become how much?
9,50,000.
9,50,000. So whenever we make a drawing, that will reduce the capital. Drawings will reduce the capital. Any doubt? Okay. So drawing is my own money. I want to take it out from the business. That is called as drawing. It is a reduction in capital. It is a reduction in capital. Any doubt?
Sir,
Yes.
so this drawing and withdrawal is same.
Yeah. Withdrawal and drawings both are same. When we go to the bank and put the debit card in the ATM gives you 5,000 rupees. That is called as withdrawal. In other words, that can also be called as drawings. You have drawn 5,000 rupees from the bank.
Thank you, sir.
Okay. So drawings can be in the form of cash, or Sanjana also mentioned that it can be in the form of goods also. I have purchased 10 laptops for my business. Now I want one of the laptops I want for personal use. Okay, so that is called as drawings of goods. I am a laptop dealer. Assuming I am a laptop dealer, I have 10 laptops in my showroom. Now one of the laptop I want it for my personal use. So I am taking the laptop out for my personal use. That cannot be part of the business, or I cannot sell that laptop anymore. That is called as drawing of goods. Clear? Any doubt, guys?
No,
Are we good? Are we good so far?
Yes, sir.
Are you following me, guys?
Yes, sir.
Yes, sir. Yes, sir.
Fantastic. We have 17 students now, only short of one student. Don't know which student did not join. Our total strength is 18 guys, and I have closed the admissions with this. Won't be taking any further admissions after this. So just for your information. So drawing will always what will happen to my capital when I withdraw? My capital will reduce. My capital will reduce. Any doubt, guys? Next, liabilities. See, in a business, assets, liabilities are very common term in a business. Liability, you would have heard this word, right? Liability. You would
Yes,
have heard this word, right?
Yes, sir.
Before taking commerce as a subject or accountancy as a subject, you would have come across this word in your 9th standard and 10th standard itself, like liability. What does it mean?
Sir, liabilities belonging to the creditors.
Okay.
It is
What
something
does it
that
mean?
So liability
Something?
means something that the business owes to someone.
Come again, Dhanya.
It is something that the business or the entity owes to someone.
Fantastic. Absolutely right. Liability is, you have used exact wordings to describe it. First wording that you used is a business, if it owes to someone. You have aptly used the word business. So we have to always think from the point of view of business, not from the point of view of businessman. Okay, fantastic. Let me explain this now. To run a business, assuming I am a dealer of laptops. I purchase laptop and sell laptops. Okay. Now I should have minimum 40 to 50 laptops with me to do the business, right? I cannot just have one laptop and do the business. Assuming I purchase some 4 to 5 laptops on credit from someone. I told boss, you keep this laptop in my showroom. Whenever a customer comes and I make a sale, I will make the payment of that laptop to you. That is called as credit purchase. So I told boss, you give me this laptop, I am purchasing this laptop from you, but I cannot make the payment today. I will make the payment in future. I will make the payment in future. Purchase, I am purchasing today, but payment I will make in future. That is called as a credit purchase. What it means, I purchase laptop from Mr. X. I need to pay the amount of purchase to Mr. X, not today, on a future date. That means today I have a liability to pay to Mr. X. Liability means any amount which the business owes to any external person, that is called as a liability. Not to external person, it can be internal also. Any amount which the business owes to someone is called as a liability. Clear? Now, liability are of two types. One is internal liability, another is external liability. Can someone give an example of an internal liability?
So the capital invested by the owner.
Capital invested by the owner. Can you explain the concept why? Anjana, your network is very poor. Lot of disturbance actually. Can you please go on mute? I think a lot of disturbance in one. I think Sanjana, can you try to rejoin? I think a lot of disturbance from your network. When you are
Yes, sir, I
turning
can
it on,
rejoin.
yeah, please rejoin.
Sir, I can rejoin, sir.
Yeah, please rejoin. Okay. So Dhanya mentioned that capital is an internal liability. Can you explain why?
So because business is considered a separate entity from the owner, and whatever the owner has invested, the business is liable to the owner to pay it back.
Okay. Fantastic understanding and fantastic explanation.
Thank you, sir.
I would have explained in a similar word and a similar language actually. One very important concept in accounts is business and owner are separate. When I put my 10 lakh into the business, that is called as capital. Now, I told business is separate, right? That means I can take the capital whenever I want. If I want to close the business, on 10th of July, I started the business. On 31st of July, I am thinking, boss, this is not my cup of tea. I want to close the business. Business has to pay back that capital to the owner, right? Clear? So when an amount is invested by the owner into the business in the form of capital, the business has a liability to pay that capital back to the owner. With whatever plus or minus. If the business is profitable, capital will increase. If the business is loss making, the capital will decrease. Okay. So whatever capital, if I am doing the business for 10 years, it's not necessary that entire capital that I had put is intact or not. There is a possibility if it is profitable, my capital will increase. If it is loss making, I may have a capital which will be reducing actually, because I will be consuming my capital. Clear? So at any point of time, the business has to pay back to the owner. Okay. That is called as internal liability. That is called as internal liability. Any doubt? Fantastic. The way you explain really shows the depth of the understanding on the subject of capital. Fantastic. Very good explanation. External liability. Yes, Sanjana is raising her hand. Give me a moment, guys.
Sir, goods damaged by accidents will also come in internal liability.
Goods damaged by,
Sir, goods damaged by accidents
okay.
will come in internal liability.
Is there anything, see liability, the definition of liability was if the business has to pay to someone, that is called a liability. When goods are getting damaged, is the businessman paying someone,
No, sir.
whether he has to pay someone?
No, sir.
No. Then it is not a liability. What it is, one of the examples, when I complete the 39 accounting terms that I have to discuss today, one of the term is your example. What you ask, there will be a term called loss where I will be covering this example.
Okay, sir. Thank you, sir.
In very simple words, if the business has to pay to someone, that is called a liability. To whom the business can pay, the business may have to pay the owner back, that is called as an internal liability in the form of capital. The business, if they have taken a loan from a bank, a business, see for a business, it's very, very common to take a loan, right? So if business takes a loan and the banker, they have an obligation to pay the loan back to the banker, that is called as external liability. The business, they make a lot of purchases on credit also. They make a lot of purchases on credit. So whichever supplier has given the goods to them on credit, they will need the money back, right, after 1 month or 2 months. So they have to pay back to the, we call them as creditors. They have to pay back to the creditors after creditors or supplier after 1 month to 2 months. That is called as a liability. External liabilities, payments to bank, payments to creditors. These are all examples of external liability. Any doubt, guys? Clear? Clear, guys? Bank loan,
Yes, sir.
creditors for goods purchased on credit. And this terminology, liability asset is a terminology which will be used forever till the time you are in touch with accounts. Even today, after almost 25 to 30 years of accountancy, we still use that terminology on a day-to-day basis. Clear? Any doubt on liability? So moving to the next one. Now the next one is, my screen is visible?
Yes, sir.
Okay. The next one is what? Assets. The next one is assets. What is an asset? Anyone? Aditya, you have raised your hand. You have a question?
Sir, is debt is a part of liability or liability is debt?
Both are interchangeably used words. Okay. I can call you Addy or I can call you Aditya. Okay. So similarly, few people they call it debt, few people they call it liability. Both means the same. Okay. Assets. Another very important thing to understand. I will take a little bit more time to explain this concept of assets. Sanjana, you can go on mute, please. Yeah. I can I may take a little more time to make you understand what is a asset. Assets are of two types. One, we call it as non-current assets. Another, we call it as current assets.
Sir, assets, for example, cash, stock, bank, furniture, that are right.
Yeah,
That's
Pranav.
all.
Okay. I appreciate that. But let me complete the entire topic
Okay, sir.
so that you get an understanding from my point of view what is an asset. And I will also encourage discussion. But let me first start explaining the concept.
Okay.
Okay.
Okay, continue.
So assets are of two types. One is non-current assets. Another is current assets. Okay. Non-current assets are assets which are held for a longer period of time, more than 12 months. I'm telling a very general understanding of non-current asset. Non-current assets are assets which generally stays in the business for more than 12 months. An example of non-current asset will be, when I want to start a business, I will have to purchase a furniture for my business, right? Furniture, chairs, I will have to purchase. Laptop, I will have to purchase. So the furniture, chair, and laptop that I have to purchase for my business, will it stay with me for 1 day, 1 month, or more than 1 year?
More than 1 year.
More than 1 year. That means my intention to use this are for a period of more than 12 months. Clear? When you purchase a dining table at home, every month you don't change a dining table at home, right? Every month you don't change a sofa at home, right? Every month you don't buy a new house, right? Okay. So these are all, every month I don't buy a new car or new two-wheeler or new scooty, or for you it will be bicycle. You don't buy a bicycle every year, right? Clear? So all these are intended to be used for more than 1 year. Whichever items are intended to be used for more than 1 year, those are called non-current assets. Those are called non-current assets. Any doubt? Example? What is the example, guys? Example is furniture. My handwriting is very bad. Please cooperate with me. That is why I mostly take classes in Excel. I don't use a pen tab and all. But today I thought, to make the session more engaging, I will use a PPT. But my handwriting is very bad since my school days. Okay. Non-current asset will be furniture. Furniture, what else we told? It may be a car. It may be a building.
Houses, sir.
Houses. The basic thing is, for more than 1 year, if it can be used, it will be called as non-current assets. A very technical term, if I have to use for this, is if it gives a future economic benefit. Future economic benefit. If it gives a future economic benefit for, that means if it is going to give me benefit for more than 1 year, that is called as non-current assets. Clear? See, when I take classes for CA Inter also. In CA Inter, there is an accounting standard called property, plant and machinery. It talks only about this particular item. I take a class for 6 hours on that, only on property, plant and machinery. The subject is so much of detail. I'm just explaining to you in 1 minute, but there's a 6-hour class only on this particular topic. Property, plant and equipment. Okay. So that is the depth of understanding that we should. For now, only one thing that you have to understand. Assets are of two types. One is non-current asset and current asset. Non-current asset means something which can be used for more than 1 year. Current asset is less than 1 year.
Which can be converted into cash within 12 months of time.
Yes, absolutely right. Used a very beautiful language, which can be converted into cash in less than 1 year. I will give examples. I run a mobile shop. There are 500 mobiles with me which are available for sale. Now, this 500 mobile, I call it as stock or inventory. I call this 500 mobile as my stock or inventory. That means that is the amount of stock that I am having. Stock, everyone would have heard that word, right? Stock. I have 500 mobiles as stock in my shop. If today I want to close the business, I can sell this mobile to anyone, right? Within 1 year, I can sell all the mobiles, right? So this is called as current assets. This is called as current asset. Something which can be converted to cash within less than 1 year. Okay. So assets are of two types: non-current assets, which has a life of more than 1 year; current asset, which can be converted to cash within 1 year. Am I clear? Now, in non-current asset, there are two categories. In non-current assets, there are two categories. One is tangible assets, another is intangible assets. What is tangible asset? Something which can be touched is tangible. Building can be touched, it is tangible. Computer, laptop can be touched, it is tangible. Furniture can be touched, it is tangible. Chair can be touched, it is tangible. Something which can be touched is tangible. What is intangible? Which I cannot touch, which I cannot touch. I will give an example.
Sir,
The trademarks.
Fantastic. Okay. You guys are making my job very easy.
Goodwill, sir.
Trademark, goodwill, patent. See, you see a logo, right?
Copyright.
You see a logo, right? For Adidas, there will be a logo. For Nestle, there will be a logo. For Airtel, there will be a logo. All these are patent, trademark, and copyright, which has a value attached to that logo. If Adidas, if Maruti wants to sell that logo, it will gain multiple crores to sell that logo. Okay. Or sell that brand actually. If someone wants to sell a brand, that is why it is patented, so that no one can Maruti's logo be used by Hyundai. No, because that is their patent, that is their asset actually. So that is called as intangible asset. Goodwill is the reputation of that company. Reputation of a company is called as goodwill. When we go to 12th standard, we will be learning a chapter called partnership. In that, we will be discussing what is goodwill, not now. For now, you can just understand something which cannot be touched. Something which cannot be touched is called as intangible asset. One more example I will give. I am taking the class through my laptop. In my laptop, I have Google Meet, I have Microsoft Excel, I have Microsoft PowerPoint, I have Microsoft Word. So this software that I have used, that I'm using from Microsoft, if that is a licensed software, I will have to pay 10,000, 20,000 or 15,000. All the offices, they use a licensed software. In fact, I am running this class through a licensed software. So whatever amount that is paid to purchase this, can you see this Microsoft? You cannot see this. It's a program. It's a program, right? We cannot see that program. It's a program. It gets downloaded and has to be installed in the system. You cannot see that program. It is invisible. That is called as intangible assets. Something which you cannot see. And it has a life of more than 1 year. That is why it is non-current asset. My Microsoft license will be there for 3 years or 4 years. Okay, I'm just giving an example. Patents, they stay forever. Goodwill, they stay forever. So all these things are intangible assets. So tangible is something which I can touch, building, furniture. Intangible, something which I cannot touch. Non-current, if the benefit that I'm going to get from the asset is for more than 1 year, that is called as non-current. If something which can be converted, if the benefit will be received within 1 year, that means I will convert that into cash within 1 year. Building, I will not convert into cash within 1 year, right? But my stock, I will convert into cash within 1 year. If I hold the stock for more than 1 year, I have to close my business. That means I am not selling anything. Clear? So the stock that I have in my business for mobiles, I have to convert that into cash within 1 year. That is called as current asset. Something within 1 year time, if it can be converted to cash, it is called current. If it is used for more than 1 year or it has a longer life, then it is called as non-current assets. Clear? Sorry. If it has a longer life, it is called as non-current assets. Any doubt? Are we good till here? Liability, something which I owe to outsider, that is called as a liability. Asset, what is an asset, guys?
It is something that is owned by the business.
Can generate money.
Property is owned by the entity.
Correct.
Entity or enterprises.
Yeah, fine. Any doubt? We'll go to the next slide. Now, there will be lot of terminologies called receipts, expenditure. When we do a business, we categorize the receipt into two categories. One is revenue receipt, another is capital receipt. One is a revenue receipt, another is capital receipt. Similarly, expenditure are also categorized into, okay, I missed explaining one thing. There is something called fictitious assets. There is something called fictitious assets. Okay. See, this,
Sir, what is that fictitious asset?
yeah, I'm about to explain. I'm about to explain. You have to give me a moment to explain.
Oh, sure. You carry
Okay.
on.
Fictitious asset, to be very frank, there is no concept of fictitious asset today. Long back when I was a student like you in 2002 or 2005, there used to be a term called fictitious asset. It does not exist anymore. What it is something like when a business is starting new, they will incur very heavy expenditure. To start a business, they will be incurring very heavy expenditure. So this heavy expenditure, if they put in their profit and loss account in the first year, the company itself will be a loss-making company. So what they do is they spread this expenses over a period of 3 years or 4 years or 5 years. Okay, so that is called as fictitious asset actually. So they treat it as an asset for the time being. Then slowly every year they will charge something to expenses. Okay, so slowly this fictitious asset, after 5 years it will become zero. Why it is called as fictitious asset? Because it is not an asset at all. It is an expenses which you are treating as an asset, and every year you are charging some part of the asset to expenses. Are you getting it? Okay, that is the meaning of fictitious assets. Next slide. Receipts and expenditure. Yeah, Sanjana.
Sir, in fictitious asset, depreciation of asset will also
No,
added.
no. Depreciation of asset is a different concept. When we purchase an asset, see, I am using this laptop, right? When I am using this laptop, there will be a decrease in the value of laptop. When you are using your mobile, the value of mobile will get reduced, right?
Yes, sir.
That is called as depreciation. It is an actual decrease in the value of asset because of using that asset, or because the asset is becoming old. Even if you don't use, for example, if you buy a new mobile and keep it in your Almirah for 6 months, after 6 months you start using the mobile for the first time, still the value of the mobile will come down, right?
Yes, sir.
So depreciation is a different concept. Either by use or because of passage of time, the value of an asset will come down. That is called as depreciation. That's a different concept. Okay.
Yes, sir. Yes, sir. Thank
So
you, sir.
I suggest whatever you have learned so far in accountancy, or whatever idea that you have in accountancy, you can keep all those ideas aside. Okay. The good thing is, as of now, you will have very little ideas in your mind. That is one good thing. Okay. So I will take you through each and every concept, but it will be, as we progress, you will get to know all these terminologies. Okay. Next is receipts and expenditure. There are two kinds of receipt. One is revenue receipt, another is capital receipt. Similarly, expenditure also capital expenditure and revenue expenditure. Okay. Revenue receipt is, see whether it is a revenue expenditure or revenue receipt. Both means whatever expenses or income that I am incurring to run the business. See, my main business is selling of laptops. My main business is selling of laptops. So any expenses which are incurred to run my business of selling of laptop, or any income that I am generating from selling the laptop, that is called as a revenue receipt, or that is called as a revenue expenditure. Okay. For running the business, for actual operation of the business, something which is really required. See, the main operation of the business is what? Sale and purchase. The main operation of the business is what? Sale and purchase. So any sale of laptop will be revenue, will be revenue received. Anything. Now what I am doing is I am buying a laptop and selling it. I am a dealer. So the purchase of a laptop is called revenue expenditure. Am I clear? Now in the same business, I have a furniture. In the same business. The furniture has become old actually. I use that furniture so that my customer can come and sit. I am a laptop dealer, but I have a furniture. I have a sofa in my office. Okay. That sofa in an office is used so that my customer can sit and see the laptop. Okay. Now that this sofa has become old, I am going to sell the sofa for 5,000 rupees. My question to you is my business selling of sofa or selling of laptop?
Sir, selling of laptop.
Yes, my business is selling of laptop. But because the sofa has become old, I am planning to sell and get for 5,000 rupees. Now, selling of laptop is a revenue receipt. Furniture is what? Furniture is my asset in the company. I was intending to use this furniture for more than 1 year. I used it for 10 years. After 10 years, I am selling this sofa. The amount of 5,000 that I am getting from this selling of sofa, that is called as a capital receipt. Are you getting the difference between selling of laptop and selling of furniture? Okay. Just give me a moment, guys. Now I will reverse this example. I am a furniture dealer. My business is selling of furniture, and to account the purchase and sale of furniture, I am having a laptop with me. Now I am a furniture dealer. I have only furniture, sofa and bed in my showroom. And to account the purchase and sale of furniture, I am having a laptop. Now this laptop is damaged. Some virus has come, the laptop has got damaged. I am going to sell this laptop for 5,000 rupees. I am a furniture dealer. When I make income by selling of furniture, that is called as what? My main business is selling of furniture or selling of laptop now? Sorry?
Furniture.
Now I have become
Selling of furniture.
I have changed my business. I have become a furniture dealer now. So my main business is selling of furniture. Anything which I earn from selling of furniture, that is called as revenue receipt. Laptop was my asset in the business now. It is an asset in the business now. It is not my stock or it is not my goods. It is an asset in my business. And this laptop is of no use because of some virus hit. it has crashed. I'm selling the laptop in scrap for 1,000 rupees. This 1,000 rupees that I am getting from selling this laptop, that is called as capital receipt. Because when I sell my asset and make money, that is called as capital receipt. Are you getting the difference now? Anything related to the business will be treated as revenue. Anything which is related to asset, it is called as capital receipt. Am I clear, guys? Same example. Now there is a small fire in my office. This laptop got burnt in fire. 5,000 rupees was the value of the laptop in my books of accounts. Since it caught fire, I am not able to sell it also. No one is willing to buy this laptop. Now, this 5,000 is a loss to me. Sanjana, your example. This 5,000 is a loss to me. This is a revenue loss or capital loss?
Capital loss.
Capital loss, because
Capital
my business is not selling of laptop. I have become a furniture dealer now. Clear? Now, again, another fire happening. Okay, I will change the business. Why I should always fire my own business? I will change the business. Okay. Now there is a business, there is a furniture business. That furniture business has caught fire. All the goods, all the stock of furniture got destroyed. This is a revenue loss or a capital loss?
Sir, revenue loss.
Revenue loss. Because
Sir, revenue loss.
I was intending to sell this furniture and make money. Now I got to go on mute. Okay. Now this is a revenue loss because I am making a loss in my core business area. My business was selling of furniture and my goods got destroyed. That means it is a revenue loss. Are you getting the difference, guys? If I am a furniture dealer, loss of furniture is revenue loss. Loss of laptop is capital loss. If I am a laptop dealer, loss of laptop is revenue loss. Loss of furniture is capital loss. Are you getting this? If you are clear on this distinction in the very first class, I am very happy actually, because these are all some in-depth concept which takes a lot of time to understand it. Clear? Any doubt? So far good. So we discussed about revenue. If I sell my furniture, I am a furniture dealer. If I sell my furniture, it's a revenue receipt. I am a laptop dealer. If I sell my laptop, that is a revenue receipt. Okay. If I am a laptop dealer, because of fire, the laptop gets damaged, that is a revenue loss. I am a furniture dealer. Because of fire, the furniture gets damaged, that is a revenue loss. I am a laptop dealer. I am a dealer in laptop. My furniture, the sofa in which the customer is sitting, gets damaged.
Capital loss.
Capital loss. Fantastic, guys. Fantastic. Wonderful participation and wonderful understanding of the concept. Any doubt? Okay. I'm sure none of the schools would have touched this in this much of detail. Okay. That is the difference between these classes and any of the 11 schools that you are representing. I can ensure that whatever I tell in my class, that much of detailing, no other classes will be covering actually. Because I come from a background where I teach CA students and CMA students in foundation and inter level. So for me, it is very important that the concept that I give to them, or the basics, are very, very strong actually. So it's very important that you understand the small basics, and you'll start, eventually what will happen is you will get so much involved in the subject that you'll start loving the subject actually. That is my objective when we discuss. So anywhere you're not able to understand the concept, please let me know. Let us understand everything conceptually. Are you clear? Now let us get to the definition now. For what does the definition tell now? What is revenue expenditure? Day-to-day operations. My day-to-day operation was selling of laptop, not selling of furniture. I am a laptop dealer. My day-to-day operation is selling of laptop or furniture. Laptop dealer, day-to-day operation is
Selling laptop.
Selling laptops.
so for a laptop dealer, day-to-day operation is revenue receipt, capital receipt. If I for a laptop dealer selling the sofa when it is of no use is a capital receipt. Clear? Similarly, capital expenditure. Capital expenditure. I am a laptop dealer. I am a laptop dealer. If I purchase a furniture, it's capital expenditure or revenue
Uh,
expenditure?
Capital.
Capital, because
Capital
my
expenditure.
business is not selling sofa. My business is selling laptop. If I purchase a sofa for my laptop business, that is called as capital expenditure, because I am going to use this sofa so that my customer can sit for the next 10 years in the sofa. Clear? Any doubt?
No,
Revenue
sir.
expenditure. Now I have become a sofa. I have purchased lot of sofas now. I have 100 sofa to any customer that is coming. That is a revenue expenditure or a capital expenditure. My business is selling of sofa. My business is selling of sofa. It is a revenue expenditure or capital expenditure.
Revenue expenditure.
All of you together. My business is selling of sofa. Purchase of sofa is a revenue expenditure or capital expenditure? Revenue expenditure. I am glad that you are able to follow this concept. Okay? Because I am not going to keep this sofa for 10 years in my showroom. What I will do, I will sell this sofa within 1 year and convert to cash. Are you getting the fundamental difference? I am a furniture dealer. I am not going to keep this sofa for the next 10 years in my showroom. I will, within 6 months, I will sell this sofa and convert this into cash. So it is a revenue expenditure. The same sofa, if it is bought by a laptop dealer, he will keep in his business for 5 years because his business is not selling sofa. That is called as capital expenditure. Any doubt? Any doubt, guys?
No, sir.
Clear?
No, sir.
Fantastic. Fantastic, guys. Expenses. The next terminology is expenses. Expenses are very simple. What is expenses? Any cost which is incurred to earn revenue. Or in short, cost incurred to run a business. See, to run a business, I have to pay salary. I have to pay salary. I have to pay rent. Okay, I have to make some purchases. I have to buy some stationery. I have to do some repairs and maintenance. My fan is not working properly. My AC is not working properly. I have to do some repairs and maintenance. So those are all expenses. Any expenses which is anything which is incurred to run a business is called as expenses. Okay. Any doubt? See, there are two terminologies called prepaid expenses and outstanding expenses. I will discuss later. Someone has to remind me maybe in the next class. Otherwise, the class will become too heavy for you. If I start discussing prepaid and outstanding, it may become little heavy. I want to keep it light. Okay. So prepaid and outstanding, remind me. Maybe we'll discuss maybe in tomorrow's class. Okay. Revenue. Total income earned by a business from its normal business. The word used is normal business. What is normal business? I am a furniture dealer. Selling of furniture is normal. I am a laptop dealer. Selling of laptop is normal. I am a builder. Selling of building is normal now. Okay. I am a builder called Purvankara. You would have heard the name Purvankara, right? No? Okay. I am a builder. My business is selling building. Okay. My business is selling building. So for me, building is not an asset, it is my goods or it is my stock. Okay. Am I making things clear to you guys? Clear? For me, who is a furniture dealer, building is an asset. For a builder whose business is itself is selling of building, for him, building is a stock. Building is a stock. It is not a fixed asset. It is not a fixed asset because he will sell this building and convert to cash within 1 year. He will sell this building and convert to cash within 1 year. That is why it is called as a stock for a builder. Am I clear? Okay. So we discussed about revenue, the total income earned by a business from normal business activities. Normal business activities means for a laptop dealer, it's laptop. For a furniture dealer, it's furniture. For a builder, it is building. Clear? What is income? What is income? Excess of revenue over expenses. If my revenue is more, I sold goods worth rupees 5 crores. My expenses are 4 crores. So 1 crore, 5 crores minus 4 crores, 1 crore is my income or profit. 1 crore is my income or profit. For now, you just remember like that. Now, in profit, there are multiple types. There is a gross profit. There is a gross profit. There is a net profit. Okay. This term may be little heavy for you to understand. No problem. We have a dedicated chapter, the second last chapter of your book, Final Accounts. That time it will be all clear to you. You don't have to worry. See, any of this term, if you are not able to understand today or you feeling that, okay, I need more clarity, no problem. The entire 11th, we are going to discuss all these terminologies. Okay, it's not that in one day you will understand all the terminologies, but definitely 100% you will understand. But still, if you are little thinking that, okay, this terminology I did not understand, don't worry about it, because entire 11th we are going to talk about these terms only. Okay, fine. Gross profit. See, generally in a business, there are two kinds of expenses. In a business, there are two kinds of expenses. One is direct expenses. Another is
Indirect expenses.
Indirect expenses. Okay. Direct expenses. Example. Any expenses which is incurred to run the operations of the company. Any expense which is incurred to run the operations of the company. I am a furniture dealer. My business is purchase and sale of furniture. The furniture that I purchase, is it incurred to run the business? Yes, that is called as a direct expenditure. That is called as a direct expenditure. Now, I have a showroom. In that showroom, I have an accountant who records the purchase and sale of furniture. Is the accountant doing anything to make this furniture saleable? Is the accountant doing anything to run this business? He is only doing accounting, which is an administrative job. He is not directly involved in purchase or sale of furniture. So the salary I pay to the accountant, it is called as indirect expense. Clear? So from my revenue of the business, okay, so gross profit is sales minus is called gross. Sales minus direct expenses is called gross profit. But business will have both the expenses, right? It will have direct expenses as well as indirect expenses. So net profit is what? Sales minus direct minus indirect. And this is the final profit of the business, is called net profit. At this moment, this much of understanding is enough. Okay. Gross profit means any expenses which are directly related to generating that income. Accountant salary is not related to directly generating that income, right? He is only recording the transaction which has already taken place. Is he generating income? I am an accountant for my company, or I am the taxation person for my company. Am I generating revenue for that company? No. I have nothing to do with revenue. I only record the transaction once it is over. So it is an indirect expense. Clear? So direct expense is something which is directly incurred. I have a worker who paints the furniture, before it is sold to the customer. The wages that I pay to the worker, is it direct expenses or indirect expense? The wages that I pay to the worker. He paints the furniture. Without painting, I cannot sell that furniture.
Direct expense.
Direct expenses. Because if we do not paint that furniture, no customer will buy that furniture from me. So his painting is very important for me to sell the furniture. So that is an expense. Without that incurring that expense, I cannot sell that furniture. That is called as a direct expenses. I have a office boy who opens the office and closes the office, and whichever customer comes, he offers tea or coffee to that customer. Is he doing any sales? No. He's only helping the customer by offering them tea or coffee. The salary that I pay to that worker, to the painter, that salary I paid is direct expenses.
Indirect expenses.
To the housekeeping,
Indirect expenses.
to the housekeeping, the salary that I pay is an indirect expense. Are you getting the difference, guys? So sales minus direct expense is called gross profit. Sales minus direct expense minus indirect expense is called as net profit. Net profit is the final profit that the business will earn. Okay, that includes all the expenses incurred by the company. All expenses, whether direct and indirect, everything is deducted when finding out net profit. Any doubt? Clear? Now, next item is gain. I think I will require another class to, the class will stop at 8:30. Tomorrow's session also, we will cover this entire thing, and this chapter will get over by tomorrow. Because we have 39 terminology, we have only reached 16 terminology. I thought I will cover the major part of the syllabus, but that's fine. Okay. Next is gain or loss. Gain. See, the wording that is used is profits arising from events or transactions which are incidental to the business. Incidental means that is not their main activity. For a furniture dealer, selling of laptop in scrap, is it a main business or an incidental business?
Incidental business.
Any profit that I am deriving from sale of that laptop is called gain on sale of assets. It's called gain on sale of asset. It's called gain on sale of asset. Clear? If I make a loss, my laptop, because of fire, the laptop got damaged. I'm able to sell this laptop for 0. In my books of account, this laptop is still sitting in my books of accounts at 5,000 rupees. 5,000 rupees loss for me because of fire. Is it an incidental loss or my real business loss? From main activities or incidental activity?
Incidental activity.
Yes.
Loss.
So incidental loss is called loss by fire, loss or sale of fixed assets. These are called incidental loss. So you asked about this question about insurance. What happens if my furniture gets damaged? Then it is a indirect loss for me. It is an incidental loss for me. Clear? Any doubt? Are we good so far?
Yes, sir.
Okay. Okay, let me discuss one more concept. See, this concept you are already aware. Purchases and return, sales and return, revenue from operations and goods. Okay. What is purchase and sale, guys? What is purchase and sale?
Sir, buying of goods for the business.
Okay. I am a laptop dealer. What is purchase for me?
Buying the laptop
Purchasing
from your
laptop.
supplier.
Buying
Purchasing
laptops.
laptops. What is sale for me?
Selling
The
laptops.
laptop.
Selling laptop. Okay, so you are clear? Anything which is related to my main business. Main business. I am a laptop dealer. Whether sale of furniture is my purchase or sale? Laptop dealer, sale of furniture, is it a sale? Is it a
Yes,
sale?
sir.
It is not a sale because it is a capital receipt. It is not a revenue receipt. For a laptop dealer, selling of furniture is not a sale. Selling of furniture is not a sale. For a laptop dealer, selling of laptop is a sale. Selling of furniture is not a sale. For a furniture dealer, selling of laptop is sale or not?
No, sir.
Everyone, for a furniture dealer, selling of laptop is sale or not?
No, sir.
No, sir.
So now you got the difference between sale
Revenue
and purchase.
receipts. Revenue
Clear? For a furniture dealer, if he purchases a laptop, we will call it as what? We will call it as fixed assets. We will call it as fixed assets or non-current asset because that is going to stay in the business for more than 1 year. Remember the word fixed assets. Remember the word fixed assets. Non-current assets are also called as fixed assets. Clear? Any doubt? Okay. Danya, any doubt? Yugeshwaran, any doubt?
No, sir.
No? Fantastic, guys.
No doubt, sir.
Okay. So, I am a laptop dealer. I purchased 100 laptops for sale. 2 laptops were damaged. 2 laptops were damaged due to rain or because of some breakage. The screen broke because during transit it fell down. I'm now returning this laptop. Back to the dealer. This is called as what? This is called as
Purchase returns.
purchase return. I have purchased 100 laptops. 2 laptops did not meet my requirement or they were damaged. I am returning those laptops. Those are called purchase return. Now, same laptop. Now I am a seller of this laptop. Out of this 100 laptop, 20 laptop I sold. One of the laptop, the customer told that it is damaged, and the customer returned that laptop to me. There's a 10-day replacement period for me. The customer returned that laptop. This is called as
Sales return.
sales return. Fine, guys. So we covered purchase, we covered purchase return, we covered sales, we covered sales return. Any doubt? Easy?
Yes, sir.
Easy?
Yes, sir.
Yes, sir. Yes, sir.
Are you following, guys?
Yes, sir.
Yes, sir.
Rajalakshmi,
Yes, sir.
I think, what is the name? Sorry, Navya. Are you following? Navya, it's your first
Yes,
class
sir.
today, right?
Yes, sir.
Are you following the class?
Yes, sir.
We have another student who is a first timer today. Forgot the name actually. Not sure whether he's in the class still. Not sure. Okay. Anyways, everyone is following the class?
Yes, sir.
Fantastic.
sir.
Guys. Okay.
Yes, sir.
So we discussed about, so what is the definition of purchases? Goods brought for resale or production. Either I can see I am a laptop dealer, that means I am purchasing this laptop for resale. Okay. If I am a manufacturer, if I am Dell or Lenovo, what I will do, I will manufacture laptop. So any component that I purchase to manufacture the laptop, that is called as purchase. Bought for resale or for production. Production means companies like Dell and Lenovo, the manufacturer itself. Whatever they purchase to produce laptops, that is called as purchase. Any doubt? Sales is goods sold to customer. Revenue from operation. Revenue from operation is nothing but income from main business of the company. Operating revenue. Revenue receipt. In other words, it is nothing but revenue receipt. Revenue from operation is nothing but income earned by the main operations. For a laptop business, what will be revenue from operation? For a laptop. Sorry?
Sales of laptops.
Sale of laptop. Okay. Whether sale of sofa, for a laptop, sale of sofa, whether it is revenue from operation, it is not revenue from operation. Are you clear? So I am a laptop dealer. I can make sale of laptop also, sale of sofa also. But sale of laptop will be called as revenue from operation. Sale of sofa will not be revenue from operation. It is called as other income. It is called as other income. Any doubt? I think that terminology is not discussed here. But for your understanding, that terminology is not given in your books. But when we sell something which is outside our business operation, that is termed as other income. Okay, Akshit is the name, I remember now. Akshit, this is your first class?
Yes, sir.
Are you following the class?
Yes, sir. I'm following, sir.
Okay. Turn on the camera. You're not allowed to turn off the camera. Okay. I think one more, Navya and Akshit, you are here for the first time. So in my classes, it is mandatory. The cameras are turned on throughout the class so that we can have a lot of interactions.
Okay.
And for me, when I see the faces, I get to know whether you have understood the concept or not.
Okay, sir.
Okay. So if you don't understand the concept, I have a different way of modulation. So I change my way of delivering. Until you understand the concept, I keep repeating it. So for me, interactions are very important. The moment I read faces, I get to know whether you guys have understood or not. So for me, it is very important that you understand the concept in the way I intend to convey to you.
Okay, sir.
Clear? This message is to all of you guys. Clear? Any
Yes,
doubt?
sir.
Are we good so far? We are at 8:28 now. I think we have covered enough. So we have covered 21 terminologies we have covered out of 39 terminologies that is given in T.S. Grewal. The same order will be there in T.S. Grewal. If you follow the T.S. Grewal book, the same order will be there. So we have covered 21 terminologies. You can read through T.S. Grewal and all the furniture example, laptop example will be coming to your mind. Clear? And when you visualize those examples, I'm sure that you will not forget. Even if I ask you 6 months down the line, what is a revenue receipt or what is a capital receipt, you will not make a mistake. Clear? Stay with the concepts. And all these are definitions. And if you just happen to see, none of the definitions we try to remember. Okay. Now, when you go and look back into your book, and when you read it, every term you will be in a position to understand. Clear? So what you have to do before tomorrow's class? Till accounting term 21, just read it, guys. No need of by hearting anything. Read it once If you're not able to understand, read it again. If you're not able to understand, read it again. But don't try to by heart it. Okay, not
Okay.
required. Not required to by heart anything. By heart is the last thing that I will recommend in my classes. Just 1 or 2 times reading it will ensure that it stays in your mind forever. And see, when I ask you what is a sale, everyone will tell that it is revenue from operations or revenue from day-to-day activities. If I ask you what is capital receipt, everyone will tell that something which is outside the business, not in the regular course of business. Like for a furniture business, sale of laptop is capital receipt. What is a revenue receipt? If I ask you, everyone will be able to tell something which is a receipt which is from the day-to-day operations of a business. Clear? If I ask you what is liability, everyone will be able to tell you something which is owed by the business to outsiders. Not outsiders, owed by the business to anyone. It can be an internal liability, it can be an external liability. Internal liability is what? What is internal liability?
Equity.
Sir, liability towards owner or proprietor.
Yes. What is the name of that? Internal liability is capital. External liability is loan. External liability is creditors. Clear? So can you all commit to me that you will be reading that 21 terms that we discussed today before
Yes,
tomorrow's class?
Yes, sir.
Yes, sir.
Yes, sir. Yes, sir.
Follow me, stay with me,
Yes, sir.
and we'll ensure that accounting becomes very simple to all of you. Clear?
Okay.
Why we separate sides, left side debit and right side credit. Okay. It's a question which is too early for me. I have not even discussed what is debit and credit. Okay. So we'll go with the flow. You will get to know in another, maybe whenever we reach that topic, you'll get to know, but it's too early for me. I will not go with the school guys. I will only follow my space so that every one of you are understanding. Clear?
Yes, sir.
Okay, guys. Happy day ahead, and I will meet you tomorrow at 6:55 p.m.
Thank you, sir.
Thank you, sir.
Thank
Bye,
you.
sir. Bye, sir.
Thank you, guys.
Thank you, sir. Thank you, sir.
Thank you. Thank you,
Sir, I
sir.
have a doubt.
Yeah, tell me.
Sir, in our textbook, they have given that owner's equity, that is capital, is also equal to the net worth, but usually doesn't net worth include the profits also?
Very highly intelligent question. Yes, when we talk about net worth, it includes capital plus profits.
Sir, thank you, sir.
Sir, but in a textbook, they have given capital is also known as net worth. So, can we use that in our exams?
Thank you.
Yes, sir.
Okay. Yeah, tell me.
Sir, so if it includes profit also, can we use that term interchangeably with capital in our exams?
Net worth and capital are two different things. When we talk about net worth, it means capital plus profits earned by the business till date, not the profit of the current year. It's again a very deeper concept for you to understand net worth. When we go to 12th, there is a chapter called ratio analysis. In that ratio analysis, it will be discussed in detail what is net worth. But for you, net worth is not capital. It includes capital plus profit. Okay, how did you come to know about, how did you came across this doubt actually? I'm surprised.
Sir, in our in the TS Preval textbook, they have given that capital can also be called as owner's equity or net worth. So,
Can be part of it. It is not. Can be part of it means it includes other thing also. Clear? So it is mentioned that capital can be part of net worth. That is absolutely right. I don't deny that statement, but it is not capital. It is capital plus profits. Clear?
yes, thank you, sir.
Akshay, you're following the class. I don't see you talking at all.
Sir, I only ask one question, sir. Account, there are two types, left side for credit.
Okay. Left side for credit and right side for? Debit.
Right side, left side for debit, right side for credit.
Okay. We will, when we go into the chapter ledger, we will discuss that concept. Okay. See, generally, every transaction has a debit or credit. Okay. It's just a way of, I will stop sharing now. Every transaction has a debit or credit. So whenever we record a transaction, we have to record both the sides, debit and credit. Okay. And it's a universally accepted thing that we show debit on the left hand side and credit on the right hand side actually. So just a format or presentation. But what has to be debited, what has to be credited, that is more important. And why it has to be debited, why it has to be credited, that we will be learning not now. I think when we go to accounting equation, we'll start with understanding debit and credit. And when we go to journals, our whole focus will be on understanding debit and credit. Okay. So you will get to know in detail about what is a debit and credit and why something is debited and why something is credited. With logics and explanation, we will be understanding.
Okay, sir.
Are you following the classes?
Yes, sir.
How is it going?
Nice, sir.
Are you able to understand the concepts and all?
Yes, sir.
Okay, good. I will see you tomorrow at 6:55 p.m.
Okay, sir. Thank you, sir.
Thank you.